My name is Abiola Adekoya. I'm the Managing Director, CEO of RMB Nigeria Stockbrokers, and we'll be talking today on investment in the Nigerian capital market. This is DANG Masterclass. In 2017 in the Nigerian equities capital market was definitely, very exciting. We closed the year on a high. We were up by about 40% year to date in 2017. Definitely very positive. Now, if you look at the early part of 2017, you'd have been very nervous for the market. Now, why would you say, why would Abiola say we'd be nervous with the market? Primarily in Q1 2017, the market was extremely bearish. And by bearish, I mean that there was a lack of interest in the market by investors. There was no buying interest. Nobody really wanted to, participate actively in the market. And this was largely due to what the market termed as a not so exciting macroeconomic environment. And that was primarily driven by the FX illiquidity that we saw. Now, moving to April 2017, when the CBN introduced the NAFEX window, or as popularly referred to as the importers and exporters window, we saw a significant pickup in the level of activities in the Nigerian equities capital market. And that momentum continued all through 2017, and we ended up the year on a significant high. It was very positive. Now, moving to 2018, you say, okay, so what's happening in 2018? Well, 2018, kicked off on a significant high, as I mentioned, and that continued. We had a very strong February in 2018. The market was up as high as about 17% year to date, which is very positive. So you're like, okay, so what does this mean for us? Where does this leave me? I'm an investor. I want to get involved in the market. How is all this excitement? How can I participate in this? How can I be a part of this? Now, I would say, for investors looking to participate in the market, I think there's certain things that you need to look out for and you need to understand to be able to participate in this market. And we'll definitely get into it, in this conversation. I think what I want you to take away from this conversation is the fact that the equities capital market is accessible to you. And I know a lot of people have had experiences in the past where they felt that, the market, got them, didn't deliver on what they expected. But I can share with you some tips and some information on how you can navigate that better and how you can be better prepared to be able to participate quite effectively and, maximize your investment in the Nigerian equities capital market. What are your goals? What are the things that you're trying to save up for? As a young person, you're saving up for what? You want to go and do a master's abroad. As a middle-aged person, you want to buy a house in a good environment. You're trying to worry about school fees for your children. As someone nearing retirement, you're worried about this. Maybe you have children that are in university. You want to pay for their education. Or you're planning for your retirement. Or you're planning for that retirement home, or the kind of life you want to live when you retire. Those things factor into the kind of investment decisions you're going to make. And also, what is your lifestyle? People tend to think, when they think investment, they get worried and say, oh, once I invest, my lifestyle is going to have to change. It means that I can't spend certain things. It means that I can't do certain things. Absolutely not. Investment helps to aid the kind of lifestyle you want to live. Investment is not akin to supporting your lifestyle. Investment is supposed to be tailored to support your lifestyle. What do you like? You can't there must be some discipline anyway. You can't have it all. There are options in the investment world that enables you to plan for certain things in your lifestyle. So you don't have to give up your lifestyle because you're investing. You may need to make some adjustments. That is true. But you don't have to totally lose yourself simply because you're trying to invest. I think that's one thing I want people to understand. Investment is not a punishment. You're not being punished. What you are doing is living a life now that will allow you to live a better life in future. And I'm going to give you some tips. Now, so let's start off. Let's assume that you're a 25-year-old, and because you're 25 years old, you have a goal to do a master's abroad, for example. Or you have a goal as a 25-year-old, you have a plan, you want to run a business or something. There's something you're pretty much working towards. You're 25. Now, at 25-year-old, typically, it means that you have a higher risk appetite. Now, what does that mean for the investment, well, if you have a higher risk appetite, it means that you can take a chance that maybe someone else can take. And with that risk appetite also means that your rewards can be greater, right? Now, but you say, well, I want to have good rewards, but I also don't want to lose my money in the process. I'm like, absolutely, we don't have to lose all your money in the process of doing that. We can manage it for you. So as a 25-year-old, what would I offer you? I would say to you, let's look at your portfolio. You're young. You probably don't have a lot of money you're earning. So you want to try and, maximize what you earn to the best of your abilities. How would I model a portfolio for you? What would be ideal as a portfolio for you? Now, so I'm assuming that your goals are tending towards going to school, probably in the next 3 to 5 years. So we need something that can get you to that place very quickly and maximize your returns, right? Absolutely. So for that, I would say, let's assume that you have 100%. I would say take 20% of your money and put it in maybe, cash and illiquid assets. Hold on, Abiola, I don't understand. What is cash illiquid? You're losing me now. Okay, let me not lose you. Before we go into what you can invest in, let's talk about what are the investment classes that you have. Now, you can have liquid assets and you can have illiquid assets. What are liquid assets? Great. Now, liquid assets are assets that allow you to, access your cash whenever you need to. There is no time frame. There is some time frame. Don't mind me saying that there is some time frame. However, what it means is that you can access it quite easily without having to wait. There is the delay in getting your money, in putting your money in and taking your money out is not that great. But there is some tenor to it. So liquid assets include things like your fixed deposits. That's very popular. Everybody knows that. You go to the bank, I want to put my money in fixed deposits. Everybody says that. Or you can also, and fixed deposits are simply tenor deposits where you place it with a bank and they pay you an interest on it. Now, you could also have treasury bills. What are treasury bills? Okay, treasury bills are bills that are issued by the federal government of Nigeria, and they pay you an interest on those monies. So you could put your money in treasury bills, or you could maybe do something a bit slightly risky. You could do something, like FGN, there's an FGN savings bond. You could put your money in that as well. They offer you a good, interest rate on that is about 11% as well. Those are some of the cash instruments that you can also have. Now, some of the cash instruments, like I mentioned, liquid assets are typically, include cash. Now, stocks are also part of liquid assets. Why would you say that? Because with the stock market, you can go in easily and come out easily without any major issues. Now, they're also liquid assets. However, the pricing from when you go in and when you come out can differ. Now, that's where the risk in the stock market happens. But they're also liquid assets. So what are illiquid assets? Illiquid assets are simply assets that, by their very nature, are hard to convert easily to cash. What kind of things are those? Land, for example. I mean, you can have a beautiful plot of land in, wherever, anywhere in the Lagos environs. It sounds good on paper. It's beautiful on paper. But how easy is it to convert that asset to cash? Now, that's the problem. You need to, first of all, find a buyer. When you find a buyer, you need to negotiate with the buyer and all of those things. That's the reason why it's slightly illiquid, because that whole process takes time. So the time that it's going to take you to get that asset converted to cash is the reason why it's seen as an illiquid asset. Now, you've said all these things, Abiola, so where do we go from here? Now, let's go back to what we said. We're talking about being a 25-year-old who is looking to go to school, who is looking to save up for going to school, or, plan their life around, what their age is, being 25. So I said, the first thing I said was that you have 20% of your assets in cash. So maybe fixed deposit, maybe some sort of, government treasury bills. Now, how do you access that? You go to your bank, you talk to your bank, and you ask them, I want to place X amount in fixed deposit or in treasury bills. Now, what's the difference? Now, a fixed deposit, the person that you're placing the money with is the bank. With a treasury bill, the person that you're placing the money with is the government. So you decide what you want to do. Now, the tenor can vary. You can have 30 days, 60 days, 90 days, 180 days, and 365 days. They will tell you in the bank when you go to. They have lots of products that can help you. Now, when you put 20% in that, why would I put 20% in that? Because you're young, your need for cash is not as great. You're not spending that much, I would assume. Don't waste your money, guys. Don't be spending all the money on the fancy stuff. You need to save.
Hi, I'm John Obidi, and I have a ton of hobbies. You know what I love the most? Making money with little or no stress. Using the iInvest app, I can invest my money in treasury bills and watch it grow in value. You can get started with as little as 100,000 naira or as much as 100 million naira. Download the iInvest app from the App Store and the Google Play Store. Create your account and make your first deposit.
So as a retail investor, you're wondering, okay, I'm a retail investor. How can I be a part of this market? I think the first thing I'm going to ask you as a retail investor is this. What kind of investor are you? So you're like, okay, what are you talking about? What kind of investor am I? What kind of investor are you? Do you like risk? Do you not like risk? Do you like taking chances? Do you not like taking chances? Are you a very investment savvy person? Do you like to read a lot? Do you like to, understand what's going on with your portfolio? Or you just want someone to handle your money for you and you don't want to get involved? You need to understand first who you are as an investor. When you understand who you are as an investor, then it makes it easier to navigate the Nigerian equities capital market. So what kind of investor can I be? So you could be a high-risk investor, meaning that you have a very high appetite for risk. It means that you're willing to take chances where no one is willing to take a chance in. Or you could be medium risk, means that you don't mind risk, but you want some level of stability in your portfolio. Or you could be, an investor that says, I don't want any risk at all. I want minimal risk. I just want good returns. I want to protect my capital. Deciding on the kind of person you are as regards risk enables us to, advise you on what opportunities you can take. So let's assume that, for example, you're a very low risk investor. You don't like risk. Now, there are certain things that we can give you to guide you on that. Or if you're medium risk, we can guide you on that as well. And if you're high risk, we can definitely guide you on that. And it's also a function of also certain other things that also impact how you invest. It's also your age. How old are you? At various levels in life, there are various things that are important to you. So let's assume that you're a young person, you're 25. It means that as a 25-year-old, the things that concern you are different from what concerns a 40-year-old. It's certainly different from what concerns a 50 to 60-year-old person. Those, for different, age groups, different things begin to matter. As a younger person, what you're focused on is different from what a middle-aged person is focused on, different from what someone in nearing retirement is focused on. We need to understand that.